Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today I was going through the comment section, just wanted to make some comments here. It says, man, if Sprott can up the spot price by 8% in 3 days, think of where we'll be by the end of the year. Again, a lot of these things get priced at the margin, which means the last few 100,000 pounds or ounces or whatever it is, could change the dynamics of the market quite dramatically. And what people do, and the general public, and what I think what would happen is if you see spot price, the Sprott price, that's a good one, right? The uranium Sprott price is what we should be calling it now. When we see that thing basically shoot higher, it could bring in new buyers and people could start piling in, and then there's your demand. Everyone starts piling in. When BSENF hits $9 a share in 2027, we'll thank Andy for life-changing advice. Well, I like baseload. I like the CEO, James Sykes. I spoke with him over the phone. I think he's got, hopefully he can find something on the properties and projects that he has. It is a higher risk, so keep that in mind. I have a feeling this housing unit starts chart would look different, with slightly different timelines for Canada and other countries. But it matters most that we follow the American RE phases because of the importance of the USD in our investing, ? Yes, commodities have two things that price commodities. One is the supply and demand, and that's your ratio against other assets. So it's the gold to oil ratio. That's your supply demand. And then you have another pricing, which prices gold. Gold's going to get priced higher based off of the dollar and the weakness of the dollar. So when you go into a commodity bull market, there's two pricing mechanisms that occur. One is the repricing of gold against the dollar. It accounts for the money supply. It's done that every time in inflationary periods, and it does not do it under very low inflationary periods. It does it under expansionary phases of real estate. Now, gold's going higher. All the other commodities that are priced in relationship to gold, that ratio, which is the supply-demand balance, are going to reprice themselves as well, as more demand and more money goes and seeks commodities. And there's going to be other preferences that countries do. They're going to prefer to own commodities versus bonds and so forth, because you're going to lose money in bonds. There's a whole bunch of other things that are tied to this, but the dollar and the value of the dollar is very important for the pricing of commodities. Do you think platinum can hit $900 spot? I don't know, and if it does, I'm going to buy some. I've got money set aside where if it hits anywhere around 900, I'm probably going to buy a few more ounces. But we'll see if it happens. Bring up demographics. What if one of the largest demographics is entering old age now, which baby boomers, and passing away, leaving behind the real estate supply? Then this expansionary phase wouldn't be so big, right? Well, the millennials are actually a larger generation than the baby boomers. And they're all coming into home buying years, and the demographics supports higher prices. Goldman Sachs did an article on this saying that all the way out to 2024, 2025, the demographics support higher home prices. And we are short 4 million homes in the real estate cycle from last cycle. So we've got a very large supply-demand imbalance, and we have demographics that support it for the next 3, 4, 5 years. Could the 1970s inflation commodity boom have anything to do with going off the gold standard into fiat currency? Perhaps that triggered a price adjustment in everything. Great question. That is part of it. That's why it was so, we'll call it so dramatic in its effect. I think we have another dramatic effect coming here shortly. If you look at the gold to monetary base ratio, we have a descending wedge that it just broke out to the upside, and gold will probably account for the money supply during this next cycle higher. I think it's going to be bigger than the 2000 to 2008 cycle, but that's just an opinion. It's not necessarily a fact. It's just an opinion there. They were cheating the money printing in the 60s. So when they went off the gold standard, gold accounted for all of that money printing that they had done in the 60s. And then all of the other commodities basically went up with it. So gold had a very good run to account for all the money that was printed. And I think we're going to have we're going to have a really big run, I think, this one coming up too, where it gets all repriced in relationship to the money supply. Handy, where may I find the sector rotation economy market chart? I'll respond to you. I'll put it there. So we'll do that. Here's one. I'm not disappointed at all. I want it to go lower. Let's correct 70%. There's nothing more beautiful than a cyclical bear within a secular bull. And you've got those completely right. A cyclical bear market means that you've got a short-term pullback, 3-4 years or something like that, in a big long-term secular bull market, which could last 10 to 40 years. We've been in a secular bear market in interest rates for 40 years, since 1980. So that's a big one in the bond market. Now, if we're going to start a secular bull market in interest rates, where interest rates go higher, that means we're going to go into an inflationary period. I know there's some people on the channel, and this guy continues to talk about deflation. We do not have deflation. We do not have a shrinking money supply. We have an increasing money supply, and inflation is going on up. Now, the rate of inflation, I think, will be transitory for a couple of these months, quarters. And the reason I say that is we shut the economy down. It went to zero, and the inflation rate, I'm sure, was super low, or we went into deflation. So when we look at a year over those periods, you're gonna see really high inflation rates or over those time frames. So that will be transitory, and then we'll come back off and roll off, and I think the rates will go down a little bit, and then normalize at some point. But I don't know if we're there yet. I don't know if they're going to normalize yet. They could. Remember, inflation also spurs more spending, so it's a psychological thing as well. So if we start seeing inflation, people start spending more money, and they say, you know what, we've got an inflation problem, and then the money velocity starts kicking up. That very well could happen, and that's what we'll see, higher inflation rates for a very long period of time. That's another possibility. Still waiting for silver to come down a bit. I'm waiting for platinum. That's the one I want. He's talking about, he likes his 30s. Economic Ninja was on Wall Street Silver video a week ago saying that housing market was going to crash. I called him out on it, and so did another guest, but he didn't like this and gave back a sarcastic response. Thanks for using actual data, Andy. Keep up the great work. Yeah, so Economic Ninja, I don't watch him that often, but he did say that we're at a housing market peak. I just don't see it based off of the low inventory that we have. When you have low inventory, you know, and we're at a peak, you're going to have inventory come from somewhere, and that's where you get in this problem of calling a peak because you have no inventory. It's like saying, you're running out of gas and you're at the gas station. It's like you've got all the gas in the world, or you're out in the desert and there's no gas station, and you're saying that you've run out of gas, and you're making the claim that you have plenty of gas, and you're just looking at them like, you have no gas and there's nothing around here. Like, where are you going to get this gas? It doesn't make sense to me. But if inventory goes up, there's your answer. Inventory has to go up before prices go down. Taco says, you're right, it's not deflation, and we have to keep that in mind. It's just commodities being priced lower while bonds and dollars are being priced higher, and you could buy more commodities for the same amount of dollars. So there can be short-term disruptions in the movements and volatility. If commodities go down for 3 months, it doesn't mean you have a deflationary crash in a correction. A correction does not mean that you have inflation or deflation. It's the underlying structures. The underlying structures, what's going on? We have inflation. Look at the CPI numbers. That is undeniable. Now, watch the Fed. If the Fed comes out and they're going to start talking probably about raising rates, that means they're worried about inflation. Now, they're going to actually have to raise rates at some point. I don't know when. If inflation gets out of control, they can talk all they want. I mean, sometimes they talk and they try to move and manipulate markets just through talking, through jawboning. But the money supply is not contracting. The growth, so you said money supply growth contracting, it's not contracting. The percent is it's becoming less, the percentage of the M2, but it's not contracting. It's still expanding at a very fast rate. So we do not have deflation, we have inflation. And now it's just, when will the market account for it? When will this money start to rotate? And how is this rotation go? What is it going to look like? Are we going to see the stock market roll over and start coming down and commodities get dragged with it for a little bit? And then eventually they break apart and commodities start to move up. And that's that rotation of money from stocks to commodities. Is that going to happen? And what does that look like? I don't know what that's going to look like. I don't know the complete dynamics of it. No one does. But what I'm betting is that the money is going to go from overvalued stocks and bonds into undervalued commodities and precious metals. That's what I'm betting on. And I think inflation is going to be the thing that spurs that rotation with higher interest rates. Just don't get why people would buy our gold royalty company and sell because of fear. But no matter, I'll happily take their shares at a discount. I do like the royalty companies as well. A lot of people buying uranium. We've got, so yesterday I sold NextGen and Encore. I like the companies, but I think they have a lot of downside short term, some really large gaps to fill on the downside. I might buy them again next year. And I don't try to time this stuff anymore. I used to do that. What I do is I focus on the ratios. If the ratios are really cheap, I continue just to cost average in. That's what I do. You guys can do what you want. But I don't play that game anymore. And, there could be a very big move that happens, overnight. It could go up. Some of these companies are very volatile. They could go up 10, 20% out of nowhere. And are you going to go chase a 20% up day? If that happens, if it gaps up in the morning 20%, is someone going to chase it? I don't. I don't like chasing things. So what I do is I just cost average in and I just hold on. And it's much easier to do that, especially if you have a YouTube channel and you're telling people what you're doing. It's very hard to be switching gears all over the place. So what I do is I just hold on. I buy when it's cheap. And when they get expensive, that's when I'm going to start thinking about selling. I think that's a good ways away. I know, Scott Lewis, I know you guys, you're trying to catch Camco. I think you said like $12 or $14 or something. Maybe it gets down there, maybe it doesn't. But he said, I think 14 would be a low. It ran up like crazy. It very well could be. Again, what I do is I just slowly cost average into all my favorite companies. If you're asking what are my favorite companies in uranium, I like Encore Energy. I like Deep Yellow. I like Bannerman. I like Forces Metals. Looks pretty good. I like a lot of the African countries or companies. I do like Baseload. I like NextGen Energy. I think that's a good one. Fission's okay. I own a little bit in that. I own a little bit in a lot, to be honest. I'm pretty spread out. Commodities and PM miners have been, I think he meant slaughtered. Hopefully after Labor Day, things will return around. Guys, I just ride this thing. If it's cheap, I'm going to ride it. And if we continue to go down, I'm just going to buy more. That's my viewpoint, though. If you guys are afraid to do that and you're getting too much cash, you've got too much money in these things because they're so volatile and they move all around, you may have to trim back. But I have like 20% of my entire net worth in this stuff, and it's spread out. So I'm fine with riding whatever through. It doesn't really matter to me where this stuff goes in the short term, because I think at some point the ratios are going to turn. They have to. They have to at some point. Even if it's 5 years out, that's fine with me. I'll hold it. So that's the type of mindset I have. I'm not here. I don't have to make money this next second. Good picture check-in. Looks like some of our major commodities are doing back tests, waiting and holding. It says you are probably the only person on YouTube who says the housing market is strong right now. On every other channel, I follow the data. They show says this is not the case anymore. I hope you are right. Well, I've seen some of the data. They use like percentages, and they chart things in percentage versus percentage. I don't know anyone in the world that would do that. Any engineer, any person in math, I don't know why you would do that. What matters is month. It's three metrics. All right, price. Is the price going up? Yes, it is going up substantially in housing. Inventory is super low. Active listing counts is what you need to look at, not total inventory. It's the active listing count, because the active listing count are the homes that are available to buy. The total inventory doesn't mean anything because most of those homes are under contract. They're not even inventory. They're gone. They're under contract. People are buying them. It's active listing, active inventory. And then days on the market. Days on the market, if it's really low, which it's super low right now, I don't know how you could be at a housing top or a market top. Now, you could have things slow down, but that's not a market top. So if someone says, oh, the sales dropped, sales doesn't mean anything. If you have no inventory to sell, how do your sales go up? You have to have large amounts of inventory. And then if we had more inventory, our sales would be higher. Now, prices, if they go up 14, 15% somewhere, they could go up 10% next year. Is that a market top? It's not a market top. They're continuing to go up. So you're going to have, and also you're going to have seasonality. Seasonality in the real estate market goes up for June, July, and then it kind of peaks out, and then we go down in the winter. And the low point is around like January, February, somewhere in that range. So the seasonality is going to kick in here, where we're going to go down a little bit in prices because it's the seasonality of it. And then we just cycle up like on a big kind of uphill movement with price. It says I've checked many channels, and those types of channels do it for clicks. If you look into, so they're talking about this scaring a lot of data on YouTube. They want to push the narrative of crashes, of things topping out. You get a lot more clicks that way. And I don't know if they're doing it just because they want clicks from the fear, or if they actually believe what they're selling or what they have. I don't know which one's right there. Hi, Andy, you made a mistake with Fission. You charted Fission 3.0. I think I had a couple of companies, but yeah, Fission 3.0 is the one I was talking about. It's a small little uranium exploration company. You got to have a lot of courage to be buying it at this point down here, but it is getting very low. I'm not buying anything at the moment, but if you guys are wanting to, I mean, it takes courage. You could cost average in at some of these prices. It's up to you. This guy thinks gold could be going to 1550 to 1580. Very well could. And I would be buying. And gold is real money. It accounts for the money supply. That is one that always continues to go up if you're a long-term holder. Gold is money, and gold is a very good thing to own, especially if you have high inflation. It's one of the better precious metals for monetary inflation. So it says, good for you who are so sure that there will indeed be a bull market in commodities. I'm beginning to believe that it's just a blaze. In particular, the precious metals sector, I see it really badly. As long as the real estate market goes up, I think the precious metals market will do very well. So that's me. It's inflation. So that's what I've seen in history, and that's what I have to go off of. I mean, so here's another question. What other assets would you guys want to go into? You want to go into bonds? I mean, you want to go to a 10-year bond that has a negative real yield. You're losing money just by holding that. I mean, why would anyone go into a bond? The only way that I could think someone would go into a bond is the COVID variant, and there could be a scare or a shutdown or something like that. That makes sense. But if there was no COVID shutdown, I don't know why anybody would want to go into bonds. I mean, the government's actively holding interest rates down. They're buying bonds. They're trying to hold this all down. In a regular market, interest rates would be going up right now. That's why they have QE. The whole purpose of QE is to hold it down. Interest rates in a free market want to go up. This one says mining stocks is extremely undervalued. Completely agree there. And I own quite a bit. Um, says if it is any consolation to anyone worried about where gold will eventually end up, Peter Thiel and his gang at Palantir, I think, Palantir, just bought up 51 million in gold bars as a hedge against black swan events. So it looks like they're piling in. This is probably the beginning of a whole bunch of companies piling into gold. I like gold because it's a private investment. It's off the grid. That's one of my favorite things about precious metals. I'm super bullish on housing too, as long as we can get student loans forgiven or put into forbearance forever. Millennials making $75K, paying $500K for a condo reminds me of 2006-ish. M2 money supply, you should talk about reverse repo being over 1.1 trillion. If money had a productive growth location, people wouldn't be begging for 0.05% interest. Well, I'm a millennial. I'm the oldest millennial. I know a lot of millennials that make a lot more money than $75,000. And I know a lot of millennials that do make $75,000 that have saved up hundreds of thousands of dollars. And they want to buy homes, and there's just no homes. So I don't think all millennials, and I don't think 500,000 for a condo, maybe in some areas, but not here where I live. You can buy a house for 500,000, and millennials are making 75, 100,000, 120,000, 200,000 dollars. So we're coming up into the our biggest earning years. At least I'm the oldest millennial. I'm 40. I'm an 81 birthday. So I see lots of people going out and buying homes. Tons of people that are millennials. And 2006, the problem with 2006 is they had 10 months of inventory. We have 1/10 of that in some areas. And in some areas, it's 1/20th, 0.5 months of inventory. So you can't have house prices go down with no inventory. It doesn't work that way. What you're going to have is bidding wars and people competing for less and less homes. The demand is there for homes. So that's my opinion. It says pressure on the dollar. I'm guessing that is why we are headed towards 94 on the dollar, or DXY. Thank you for explaining why interest rates have been going down over the last 40 years due to inflation. I'm a dollar bullish since the Fed talked about probably maybe tapering 120 billion. So the dollar has gone down during expansionary phases of real estate. We are in a very big, I think, which will come into an expansion phase of real estate, which is going to be a dollar headwind for the dollar. I think the dollar is going to weaken. And we've been 40 years of low inflation is what we've had. We've had declining interest rates over that time frame. I think that's going to change. I don't think we're going to stay at low inflation rate or a low interest rate forever. I think at some point it's going to change, and I think it's going to be over the next few years. That's my opinion. If you disagree with that opinion, I would take a different investment approach. That's what I would do. So if you think the dollar is going to be strong and you think that there's not going to be inflation, if you think there's going to be deflation, I would be positioning in bonds. That's the spot to be. Or in dollar-denominated assets. Now, interest rates as low as they are, which are basically at zero, then I don't know where stocks are. I don't know how stocks could go higher with interest rates this low. If interest rates go up, stocks are going to get absolutely hammered. Same with bonds. And the Federal Reserve is buying bonds to keep interest rates low. So the natural tendency of the market is to go higher with interest rates. They are artificially holding them down. We have inflation, and the pressure will mount on the dollar. And that's what we have to see and watch. If the dollar goes up, we have problems in the short term. If the dollar goes down, we know that all the money printing is manifesting itself and hurting the value of the dollar. So that's my take on it. It says, is it the Fed themselves buying up all the bonds, new and just curious, which I agree with. They're buying a lot. I don't know about the 10-year, but they are. It says definitely not, but they are playing with house money at 3-ish% of annual bond market. That is a big problem, which is why Andy is full of garbage. The Fed could easily increase from 120 billion a month, and we still wouldn't see inflation. Before we ever dream of interest rates changes, the taper will have to happen. Oh yeah, in the FOMC. July's meeting notes, they talked about taper. Remember, when your parents talked about sending you to your room, that worked, didn't it? Let's just talk about it. Luckily, the dollar is king, and we will all get to be ignorant. But that's your opinion. My opinion is that we have inflation, that prices are moving higher, and that with an expansion phase of real estate, that's where I think the inflation is being derived from. That's what history has shown us, and that's what I think it might happen going in the future if we're in an expansionary phase of real estate. Coming on down, bravery is how you make your money and other accomplishments. Yep, your greatest. I think Will Smith said something like, "The best things in life are hidden behind fear." Coming on down, see if there's anything else here. Sprott-tastic. We could say it's uranium Sprott price from now on. We could call that. Maybe I'll put that as my thing. I'm still here. Nothing will kill me. So sales of new single-family homes fell to an annualized rate of 676,000, 6.6% below May's rate of 724 and 19.4% below the June 2020 level. The inventory of new homes for sale jumped. Be careful on some of the stuff that you read. You want to look at active listings, not just the inventory. And yes, we've had a lot of problems with new home builds in terms of labor and in terms of input costs. Input costs have been going up, and people are delaying the builds of their homes. It says rates going up, that is cute. For 40 years, they have only gone down. Is that before or after the Fed stops buying the 1.4 trillion in bonds annually? The annual home sales are in the 6 million range. There are only 70 million homes in the U.S. It doesn't take rocket scientists to realize that we are running out of steam since the GFC. Wages haven't changed. And someone hoping that PMI, property taxes, insurance, maintenance, interest will be paid by the next buyer. Okay. All right. Well, I think I'm going to end it there. I don't see any other questions, really. So if you guys like this content, give me a thumbs up, subscribe to the channel. If you guys want to debate or whatever, put it in the comment section. If you think we're going to have inflation, deflation, go ahead and throw it in the comment section. Looks like we got some deflation guys on the channel. I am basing this investment thesis off of an inflationary cycle. So if you think there's going to be deflation, you definitely don't want to be in commodities. You'd want to avoid them. So if you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.